Hi everyone, welcome to the Digital Fifth Fintech Show. Today we have with us Samir, who is the managing director of Nexus Venture Partners. From a startup ecosystem, I think Nexus has been one of the most supportive VCs in the country. And Samir himself is very approachable and very frank in his opinion. So I'm so happy to have him on board. So before we go further, I think I wanted his perspective on what is the philosophy of Nexus Venture Partners, and of course, the kind of investment they've done, what are the thought process they have. So over to you, Samir.
So I'll give you a quick background about Nexus. I'll take a few minutes to talk about it and our philosophy. And I think that'll be very useful as to tell you from where we're coming from. So we're about 13 years old. We are India's largest homegrown venture firm, early stage venture firm. We manage about a billion point six across our five teams. Uh, when we started out about 13 years ago, we were focused on two broad theses or two broad pockets.
Mhm.
One is building cross-border companies out of India,
Okay.
companies which will start in India, move to the US. This would be typically in technology companies and companies which start in the US but are building their product out of India. So this corridor was a large part of our focus when we started out as a fund.
Mhm.
And so Nexus, our thesis was that there was a whole BPO wave, the IT services wave, and then there would be what we saw around 2007 when we started was a lot of these global multinationals were creating offshore product development centers here, OPDs. The Googles and the Adobes and the Microsofts were starting and building out products. And our thought process was that there'll be a bunch of people coming out from these offshore development centers or ODCs and building products for global markets. And we wanted to be the firm that would connect, entrepreneurs which are starting in India to help build their companies in the US. We felt that India is a great place to build companies or technology because of excellent manpower, great engineering talent, all of that stuff, and low cost. And US is a great mecca of technology consumption. So we oriented our team from the very beginning across the corridor, essentially when we started out. And if you look at the firm, we've done about 86 odd investments. I would say about 55 of our investments have been cross-border technology companies, right, in the India-US corridor. So that and these have been typically enterprise companies, right from software-defined infrastructure on storage, networks, and data centers, all the way up till applications and SaaS applications. So we've done a bunch of things in that. We are probably India's largest SaaS investor. We have the most number of companies on the SaaS side. So this is one pocket of what we do, right? This cross-border tech, and that's why we oriented the team in these two countries, right? And we, unlike other firms, we are one integrated team. We work together across both ends of the corridor to help build global technology companies, starting with the US, and then from there on, we expect these companies to go to other parts of the world. So that's one part of the thesis. The other part of the thesis is actually investing into the India consumption story, which is in India for India, right? And there our focus has been to find entrepreneurs who are looking at existing industries or in the existing spaces, but thinking about using technology in a very disruptive way to kind of change the industry. So we've done a bunch of things around commerce, e-commerce, B2B commerce, financial services, fintech. We've done a lot of things around education. We've done in stuff in hospitality, logistics, and the likes. So these are the two broad pockets that we are focused on as a fund. We've had a number of cash exits as in our existence. As a fund, we've had about now 19 odd exits since we started. We have a few more in the works that you'll hear about in the last few months, in the next few months. The uh, you know as a team, we are a very small team. If you look at it compared to other venture firms, we are an 11-member team, and we're spread across 3 offices. We have a presence in the Bay Area on Sandal Road. Three of my colleagues are there. 4 colleagues in Mumbai. That's where we had a presence in India when we started, and we have 4 people here in Bangalore. I moved from Mumbai to Bangalore to kind of get things started here about 8 years back. And so it's a very small, tightly integrated team working on companies across these two spaces. We typically invest from seed, which is writing a 1 million check, all the way up to about $10 million. Sweet spot is doing $3 to $5 million checks, which are typically called Series A's. And there 85% of our Series A investments are in companies which are pre-revenue, pre-product. So what we look for are great entrepreneurs transforming their industries at the right time, and have the ability to build a great team and have a very dis, distinct kind of a go-to-market strategy. So that's a little bit about Nexus and what we've been up to in the last few years.
Okay, so maybe if you could specifically give example of early stage in your investment, which has been successful, those areas where you're talking about India to US, that corridor, or
Sure.
within the consumption story. Some examples of them will be very useful.
Absolutely. I don't know whether you read about this company recently, which was very low key, but in our portfolio, and we seeded this company called Postman, which is in the API lifecycle
I think
management.
everybody knows about Postman now, right?
That's right. So that's a company, for example, we at Nexus at Bangalore came across. I met them for the first time here. This was an entrepreneur who was, doing this as a side project. We partnered with him very early in his evolution. Helped him kind of anchor and put together the company. Gave him the first $1 million. Helped around in the incorporation, bringing the other two co-founders. He had two other co-founders who were moonlighting on this project. Help them get those people across as well. Help them hire their VP engineering. Help them in the basic, things around go to market. Think through all of those things. And it was an open source project. We went into a closed source project, and the company, since we invested, this was in August. We seeded them in August of 2014. Money went in September, October. Since then has now, is being used by almost 12 million developers, 500,000 enterprises. And we're the largest shareholders in the company. We've been, of course, help them really move to the US. When Abhinav moved to the US, we really helped them. Our team worked across both ends of the corridor to really help him find his feet in the US. We helped him hire an independent board member who's still with the company and has been a fantastic thought partner in our journey. Helped him with the fundraisers, helped him with helping think through the market strategy and all those aspects. So a perfect example of two both India and US working on a company right from India, which was started off in a small house in Indranagar, in one of the lanes in Indranagar, to now becoming a $2 billion company. I think they have a massive opportunity ahead. They've been one of the most capital efficient unicorns in the country. They've spent probably about $4.5 billion to date, getting here. They obviously have almost 200 odd million in the bank. They're profitable, growing very nicely. And our thought process is, the founder and the founding team really wants to take it public someday, and we're very, very, very fortunate to have partnered with them. So that's an example of a company where we worked as one team. Everybody at Nexus worked very closely with the team in whichever areas that they could uh, to help this company and help it grow. So it's an example of a very original global tech company coming out from India and going to the world. And I'm hoping and knowing Abhinav and Ankit and Abhijit, they will probably take the company public someday, and will be a very proud day for all of us in India in the ecosystem. It's not whether it's for Nexus or anybody else, but
I
it'll be a
agree.
very proud day for all of us when we'll see a very original company come out from India and go public and create a massive category creating company. It's one thing to note is that there are about 30 odd million developers in the world. The company's purely organically got to almost 40-45% market share globally in this thing, purely organically. I think they will be pretty much be the platform that any developer globally wants to work with when it comes to APIs. So that's an example of a cross-border thing. We've done this now with many companies. Dhruva is an example, or Headspin, or Hasura, or Observe. They're all examples of companies where we've partnered with entrepreneurs here in India and helped them go global. And there are a bunch of companies which we partnered in the US with one co-founder here, where we've helped them build these companies across the corridor. Biz2 Credit, which is in the financial services space, is an example, right? They based out of East Coast in the US. We partnered with them, and then they opened up a center here in India where they're building out the product here in India. It's a global fintech company, very nicely profitable, growing very nicely, even through the crisis, has remained PAT positive. Someday we hope that someday we'll see a listing on that company as well. But that's an example of a company we partnered in 2011, 2012, and have partnered with them for 8 years. A fintech company building out in the India-US corridor, India building the product, US being the primary market for development. And now the company has gone global, has their offering here in India, has their offering in Southeast Asia and in Australia. So that's kind of an example of sort of a really more relevant to you, but a global sort of fintech company also that we've had the good fortune to partner with. We were the first investor in the company, wrote the first check, the second check, and recently we raised a $50-odd million round from with Westbridge coming in and partnering with us on that.
Okay, this is brilliant. This is brilliant. I mean, I did not know, honestly, before we interacted, that Postman was a India story. I did not know. So I was so happy to see that, because wherever you go, everybody uses them as of now, right? So
That's right. That's right. And if you look at software globally, it will become more and more API centric, and that's the way the world is moving. So we all as Indians will be proud of it someday. So
right.
it will be good. It's very, very fortunate to partner with them.
Absolutely. So coming back to, since we are from fintech ecosystem, so I wanted to know your views on fintech ecosystem at this point of time, where we stand today, and also if there is a segment of choice within fintech where you look at investment, where you are really interested. So that's what I was looking at.
Sure. No, so I think we at Nexus have obviously we understand technology as decently well, and we really the underpinnings of that. So we'd like to invest into companies which are more technology rich in this space, ideally, right? And We've done a few investments over the last few years. I've talked about Biz2 Credit. We've also partnered with a company called Turtle Mint. As you might know, we are first investors along with Bloom in that company, and that's also tracked very well. We'd invested in PaySense, that you might have heard about, which Naspers acquired. We also investors in a company called Namaste Credit, which is again the SME lending platform space. A very recent investment in the fintech space is in a company called fintech insurtech space is a company called Onsurity, which is in the group insurance space, group health insurance space. We feel there's a very large tailwind in that space, and we came across this team that we decided to partner with and seed and build with. On the traditional financial services side, we've done investment in a company called India Shelter Finance. Again, a profitable company despite of all the COVID and all those things. A secured lending play that we've partnered with. So that's an example, gives you a flavor of what we've done so far. What we are very bullish about is companies which are using technology in a particular way, but don't lose the DNA of what traditional financial services are all about, which is it's easy to give out money, but very difficult to get it back. And how do you build the right system and platform and the business processes to be able to enable that? Because we do not want to look at companies which are just growing their book but have very difficult time recovering that money. So our preference is ideally to do things which is more secured lending based stuff. We also like companies which are on the insurance space. So we're looking at multiple companies on that side. On Surety is one on the insurtech. We've also done Turtle Mint as well. So I feel there's a massive opportunity there. In terms of doing things. There's also an opportunity as far as open banking is concerned, where clearly banks are laggards in many ways, and how do you bring them into being relevant partners, with NBFCs and the likes, and to be able to get their existing customers a flavor of newer services. So we're looking at that neobanking. We've been looking at different substrates around that. We're quite bullish on that. As far as I would say, we are also looking at newer opportunities when it comes to wealth tech. what can possibly happen. Clearly, from a macro standpoint, it's very obvious that the retail participation in the public markets in India is very small, and and it has needs to be looked at in a very comprehensive way for it to become very large, right? Mutual funds have obviously gotten a lot of traction, and a lot of these AMCs have come up, but I think the space needs to be reimagined in a very intelligent way, and we are still looking for a solid entrepreneur who can build that. So I think we are fairly bullish on that. The other part is, given the obvious things around the massive focus on digitization that has happened in the last few years, with some of the plumbing being democratized by the Indian government in terms of the GST, in terms of Aadhaar, UPI, and the likes, the basic plumbing that has come into place. I think there's a massive opportunity that and we're seeing some shades of it in some companies, on the SME in tech side. So we're actively looking at these broad pockets around it. We would prefer teams, as I said, which have a very strong technology underpinning, but come from an understanding of how business runs in India and a very good familiarity around that, and are focused on building a unit economic business, because any of these fintech businesses are a long haul business. I think unfortunately, it's like blitzscaling doesn't apply to fintech as nicely until you don't get your economics right. And in a country like India, you have to find many micro pockets, and they all behave very differently. So to be able to build a company which is very large, you need to be able to get the segments right, and you have to get the right insights on the population to be able to do things intelligently. So we're looking for entrepreneurs around that. We also are very bullish on what will happen, around sort of. It's very obvious that there are the tailwinds around payments and the likes. So there will be some very interesting companies there. So we obviously have a lot of respect for what Razorpay and the team there is building, and their thought process. I think that's a very good DNA, using technology and understanding things, and looking at different pieces around the puzzle around financial services, right? So I think there are some very good, very interesting companies emerging in India, and I think we are just at the beginning of it. If you ask me, we've seen the first wave of fintech. I think the next wave will be a lot more thoughtful, a lot more nuanced, a lot more vertical, and a lot more focused in their micro segments, which in India can be very large segments. But you need to really think through how you will do collections, how you'll do, the gory stuff. How do you get all of that going in a sensible, and that is a very essential part of the business. I think a lot of the entrepreneurs in the first wave have ignored that, and now to their own peril, as you'll see a lot of these businesses going out of business. But I think this memory will be very fresh when in a lot of people's mind when they look at their companies and businesses next time. The next wave comes in, you'll see a lot more thoughtful entrepreneurs come out and build companies. But that's kind of giving you a flavor of what we've done, what we're looking at a very high level. API centric businesses are very we have a deep degree of affinity to those kind of businesses. Yeah.
I totally agree that point, right? So when you say gory business, right? I think I prefer those businesses which are dirty, right? I think everybody who thought about a simplistic, let's say, lending business, which is front end, aggregate the customer, get it. I think at a scale, most of them have lost out. And then there are nuances which are in back end, which typically a good credit underwriter or a banker would understand. Those who are missing in those scenarios. And maybe in payments, it worked well, right? But in lending, the things have gone wrong because payment did not have the credit risk kind of stuff. So that's one side. And maybe I do believe that on the insurance side, manufacturing is not happening. So we have just one or two guys manufacturing new products, but not enough. That's NBFC segment where anybody can produce new products all the time. I mean, I think enough choices, and maybe a lot of guys should enter into B2B segment, which is, for example, trade finance has not been changed.
Nobody has cracked it as well. There are a bunch of companies, whether it's a cash flow, whether it's a bunch of these companies which are there in the trade finance space. But I don't think anybody has, as you rightly pointed out, has cracked it. I mean, there have been the Vayanas which have been there for quite some time. There's, Primer Dollar. There all these kind of companies which have been, they've existed for quite some time, but nobody's been able to do it. But as I said, I think the next wave of entrepreneurs will be created, which will focus on one sort of verticals which will be very deeply nuanced with an understanding. Somebody who understands stuff for how exporters out of India work, right? So how does the financing there work? So very, very nuanced thinking needs to come in rather than a very generic kind of thing. But if you look at venture and if you look at how companies are built, historically, this is how the first wave is always a very chaotic wave, and then the second wave is a lot more nuanced, and people take learnings from it, and then massive wealth creation happens. Some of these companies remain and they become very large, and clearly the Amazons of the world, the eBays of the world were the ones that survived and grew larger. But then the next wave of consumer internet or the next wave of companies which come out will be a lot more nuanced, a lot better, right? If you look at Lending Club, for example, is really in the doldrums today, and if you look at Affirm, on the other hand, is a lot more nuanced, a lot more intelligent as a company. Obviously slightly different models, but I'm just telling you that there is a generational shift in companies in 4 5 years, where companies get smarter, the underpinnings get smarter, the behavior is a lot better, all of that stuff happens. So companies are much better, enterprise value creation happens, and enterprises are built. So.
No, I completely get. So I think let's come back to a basic point. So I think obviously the last few months have changed a lot, and there's also a view that investors are not lending. So what has changed for you, the scenarios in the last few months, and what's your view going forward?
Obviously, I'll use this word which is being used so much, but we are in very unprecedented times, right? I mean, it's clearly everybody uses these things, but it is true, right? We haven't. I think nobody in our living memory has gone through a pandemic of at this scale and sorts, right? So I think this has taken. Nobody could prepare us for this, right? How much ever we say we're very smart, there have been tailwinds for some, and for a few handful of players who are on the digitization side, whether it's education or content, and certain businesses have had a massive D2C brands have had a massive tailwind. But most of the businesses, if you look at it, traditionally have had massive headwinds, right? Uh, what does this period mean? I think, clearly, from a VC fund, if you look at it, right, they are allocating capital into multiple industries and things like that, right? Clearly, we're just seeing a tailwind. It's very easy for us to kind of say that, we're going to put money into these things. But, as early stage investors, we know that, that there is always creative destruction which will happen right now, and teams will come out and they will build new companies and they will look at the entire landscape in a very different way. And I would say India, if you clearly know, Samir, that in India, we are the luckiest beneficiaries of massive democratization of world-class payments and financial services
Absolutely.
infrastructure.
Absolutely.
So the underlying plumbing is being democratized by the government in a very, very interesting way for us, right? Though there are many challenges on the regulatory side, those overhang exists, and I hope that the policy overhang gets better. Whether it's applying for NBFCs and Mauritius route not working out, and all of us getting psyched out, what's going to happen here. I just hope that overhang of thing is there today. It's in every business that happens in India, whether it's in grocery, whether it is in financial services, whether it is in lending, any of those things, there is an overhang. I really hope that the government gets its act together there. But if you look at the small group of people that I spirit and UIDAI, the amount of and NPCI, they're doing a fantastic amount of job getting the plumbing right. I think and that is going to evolve businesses in leaps and bounds. It's not us; they're going to be like orbit changing things for us, for entrepreneurs to be building things on, right? Because it's a culmination of things that they can do to get businesses growing. Yesterday, businesses which required KYC of 1,500 rupees were unviable because the lifetime value of the customer was not going to be that, right? So, this thing came about, the KYC has become a lot lesser, suddenly that you can address a segment and you can build a business in that, right? So these game changing things are subscription, people did not want to pay for it and now subscription is allowed. So some of these things will really allow for different kind of businesses to be built, which were not viable earlier. It's going to be a sort of a Lalapooza effect, or, a confluence of multiple things which will happen here that will make some of the businesses which were unviable even 2 years back viable now, and with the behavioral shift. So I think, for entrepreneurs, I would say in existing businesses, please just focus on collections and ride this space way through. Just absolutely focus on it. Do not think about my book is smaller than yours or your book is bigger than mine. I think those days are it's time to get more nuanced in your thinking and thinking about very deeply about your value proposition, and making the unit economics work, and obviously doing it at scale and building the right processes and all of that stuff, using tech very deeply internally within the house to be able to become a lot more efficient across the board. So I think those are things that, focus on in-house, the plumbing, and getting that right, so that, using technology so that it'll help you scale, getting your processes to be world class, focus on collections, and focus on segments, which all these factors which are getting democratized, think about your business model in a different way, so that you can address larger and larger crevices that exist in terms of your market size. You can go into separate crevices, and those itself can be large. So think very deeply about that. I think that's what it is. It's a deep time for introspection around this, and fixing the basics in the company. And it's okay to kind of go back to the drawing board and reimagine the business at this point of time. I personally feel there's a lot more pain coming. The moratorium, of course, as you are aware of, is in play, and it's anybody's guess how things pan out. But I think personally, if you ask me, there is going to be a period of uncertainty over the next few quarters, and I think things will get better. The macro thing, I would say, for any entrepreneur at this point of time, there is, at a very, very high level, the mental model that to apply when you're looking at businesses, is that there are a bunch of unstructured businesses which exist, right? Whether gold lending, whether it is money lenders, whether it's all of those things, right? This has been a systemic shock to all of those people, right? All of these informal kind of things. And when there's a shock to the system, there's a massive move towards, there's those people lose businesses, their businesses will shut down, they'll have issues in collections, they'll have all of that stuff. But the need is not going to go away, right? India is an credit hungry country and needs that to grow. So there is a massive opportunity to take some of these unstructured businesses and bring them into the structured frame of mind, and build structured processes around it, and bring them into the new era, right? I think that at a macro level is something that all entrepreneurs should look at in within their spaces, right? Whether it is the chit fund market and how will that get structured into something, there are many other spaces which have existed but which need to get moved towards this. And I would say that across the board, I'm seeing this across all the companies that I'm involved with, the unstructured business players, whether it's in logistics, whether it is in grocery, whether it is in in PGs, they're all under deep amount of stress. And that's where a company which is well capitalized, has got its act together, is institutional in its mind frame, and you can use technology and you can use platforms that can think through a lot more deeply, can evolve a lot more stronger from this and a lot more resilient out of this. And because the venture ecosystem would support them, and they'll be able to get debt and all of those things. A lot of the people have had zero economies of scale in the unstructured market. That macro trend towards structured is definitely under play right now. The overall market will shrink, but I think good companies with good underpinnings on the venture side will gain market share.
No, I agree. I think so. We have seen demise of a lot of startups in, obviously, short-term loans and all. But I also can tell you that some of them are really using this time well. The other side is that cost structures are changing, right? At least costs are reducing by 30 to 50% because of rentals change and the employee structure. And of course, everybody is questioning that clear set of, almost I would say, a debt. Basically, you have hired somebody you can't use, but you don't want to get rid of him, or the fact that you have a certain set of facility which you have, let's say, acquired, but you can get rid of. I think there are areas of improvements which I think everybody is executing. So with 30% reduction in cost, I'm sure a new business model can all be open, right?
Absolutely, absolutely. And if you're reimagining your thing, like you needed somebody to go and get something or collect something, if that can be done digitally, that itself will change the behavior, right? A lot of this will reinforce behavior. This environment will reinforce behavior at the customer end to be a lot more digital, and that fundamentally will also lower your costs, in addition to all the stuff that you can do at the corporate end, optimize cost, optimize things which are off the thing. But there's also like fundamental change in customer behavior moving towards more digital platforms, which you can leverage to even further lower that, right? So there are many things, but you need to have the wherewithal and not be under stress to, like, okay, a lot of the businesses that I know of are under deep stress because they're not able to do the collections, and they're not able to raise more money and all of that kind of stuff, right? So focus on the basics and focus on the plumbing and focus on getting the company right, cost structure right, economics right, changing customer behavior in the right light for you to have scale, right? And that typically is going to be more digital and more digitized. We've seen that with Turtle Mint as well. They had trouble in the March and April because people were very scared. But now, agents are using digital technology to get to customers, and everything is happening digitally. So they are a lot more productive because they can close more leads in the same day. Right? So things like that are happening, and now the business is scaling up very nicely.
I
So
agree. I think government will also change a lot of rules. For example, Aadhaar came back and many new things. E-sign had stopped, it's back. E-Nash is back. So I think a lot of things are getting added back. And hopefully, and we've been talking about it for 3 years, we are saying India needs a National Lending Corporation of India. Hopefully, there's some entity which will come, which will digitize and sort of homogenize the whole credit side of it. Anybody should, ideally, you should be able to take loan from you, or I should be able to take loan from you. Why do we need third-party entity? I think there are things like that which will happen, hopefully. Maybe a
as
loaded
you
question.
know, the Indian regulators are always scared of the edge cases, and the edge cases happen in big numbers in India, just given the law of numbers, right? They do happen, and then they spoil the thing for everybody, right? So I think that's the situation. So regulators are always paranoid about it, and it's not unfair for them to do it, but they need to think more digitally. They need to think more technology. They need to do, luckily, as I said, the plumbing is getting better and better on the sidelines, right?
I,
If they comprehensively think about how things will get better and reimagine how things will work and mandate it, then
I,
and that's the forcing function that they can do to kind of really accelerate things for everybody.
I agree. And I mean, one UPI has changed. If imagine that PL business is sort of digitized end to end, life will change, right? Instead of using Nash as the way it is, maybe there can be a new innovation around Nash, which is built ground up. I think a
That's
lot can change. Before we close, maybe one or two last questions. I think
sure.
one of them is loaded, and I'm in this environment. We are launching our own accelerator. So what are your views on how the utility of accelerator to the market? Because now when we are building it, I know it's very awkward time to start, and we are still doing it because we think that B2B business can be improved. So your views on accelerator, how have you collaborated with them?
So I would say that, it's a great time to start any kind of business which is to do with entrepreneurship, right? I mean, or supporting entrepreneurship is even for venture and all that stuff. It's a great vintage, if you ask me, because the kind of people that you're going to get to talk to or who will be keen to work with you as a VC or as an accelerator will be people who are very, very serious because they're leaving their cushy jobs or jobs and starting this out in a very, very difficult environment. So they're very driven. It's not fashion. It became fashionable, a year and a half back to start an venture because everybody could do it because they could always go back to a job or whatever. Right now, the bar is a lot higher, so the quality of people that you will tend to get will be a lot higher. I think, where there is an opportunity is obviously people who are coming to fintech are not people who are graduating from college, right? There are people who have some experience, but I think as you as an accelerator can really help to kind of give them a deep amount of perspective around what is happening in the ecosystem and what can they leverage so that they don't reinvent the wheel and have cross learnings across all the things that they're doing. And more importantly, also, they don't cut, copy, paste models blindly from other parts of the world, but they really think about what are the nuances that they need to think about. And that could come through your advisory board, it could come through sector experts, and you have fantastic reach with a lot of them. So to be able to, as they're building out their business, but to, I would say a lot of the fintech people just cut, copy, pasted models without really understanding the Indian nuances or understanding the India, the stack within it. I saw people like, they just jumped into it and they were like, we'll build a parachute on the way down, right? That was the model earlier. I think this time you'll attract people who will be a lot more thoughtful, hopefully, and you should really help them provide that nuanced thinking around what they really need to customize and think about to build their businesses and what is different from other models, so that they really think about it from an India execution standpoint. And that I think you can provide by experts that you can marry into their journey while they're thinking through the business model and things like that. And I think it's a great time. And I think if you look at it from fintech standpoint, there is no big accelerator. There are multiple diffuse initiatives. I think you have the opportunity to kind of bring all of those people together. I know we're on groups together, and we've seen that how there's enough love and great people in that group to kind of come here and help you build this out. That's what I would say.
Thank you, Samir. And anything before you close to anybody in the market? It can be government It can be to other investors or anything which you want to sort of share before we close.
I would say that we are living in very strange times. I think we are looking at it from a very micro perspective about fintech, this and that. I think there are many macro questions, and we live in very uncertain times and very difficult times. If you ask me, this pandemic is one part of it, but what we're seeing in terms of China, US, the geopolitical tensions that are existing. So we live in very uncertain times. I think you have to think very comprehensively about what you're trying to do and what you're trying to build, and it's a great time to build. The best companies are created in recessions, and you should not get you know disheartened or whatever. You should just focus on building out your company. Really think about it more holistically, though. And you should have the ability to think at a micro level, which is your company, and also at a macro level around what you need to align with to be able to build decently large companies. I think there will be a lot of volatility across the world in the next 18, 24 months and things like that. I would say macro India can look good, but can also look very listless. We could be right in the middle of sea, with no wind at all, right? So we can be pretty sad. Both scenarios are there. I'm obviously hoping, like everybody, that things are better, but you really need to think through different scenarios as an entrepreneur, as an accelerator, as a VC, as everybody in the ecosystem. Think through multiple scenarios and plan for the worst day, but hope for the best. I think what this thing has really taught us is that we have to plan for the worst, and it has to be, we have to do a lot more deeper scenario planning as we build out companies and anything that we do. So that's what I would say in life, in across every stack in your life. You need to do that specifically with your company, because as an entrepreneur, you put all your heart and soul into it. So that's what my advice would be.
Thank you, Samir. Thank you for these insights. मैंने भी बहुत कुछ सीखा. Thank you.
No, I don't think that's true. I have to learn a lot from you,
Thank
but I just thought of sharing my points. But this is thank you so much for having me over, and enjoyed my discussion with you.
thank you. Thank you.